And we've seen central bank presidents in Europe explaining how they might be able to use gold revaluation accounts to strengthen the balance sheet of central banks, because central banks are having some difficulties of their own. And that's why I think a gold revaluation is still in the cards. Central banks know they will need to have a monetary reset somewhere in the not too distant future. And they might need to have a revaluation of gold as well.
In a recent statement, Willem Middelkoop, founder of the Commodity Discovery Fund, has expressed a significant perspective on the ongoing global economic shifts. According to Middelkoop, the Big Reset has been initiated, signaling a change in the balance of power with the West and the dollar losing influence. Meanwhile, the East and the Brics nations, including allies such as Saudi Arabia, gained prominence. One noteworthy development involves central banks contemplating the revaluation of gold to address their challenges. This move has been accelerated by declining trust in the dollar, evidenced by the freezing of $300 billion of Russian foreign exchange reserves following the Ukrainian invasion. Central banks in Europe, remarkably those holding gold, are poised to utilize their gold revaluation accounts to offset balance sheet losses anticipated in the coming years. The collaboration among Brics nations suggests the formation of a parallel trading and monetary system, indicating a departure from traditional fiat currencies. The proposed Brics currency, backed by gold, draws its value from the underlying precious metal, contrasting with fiat currencies dependent on government declarations. Middelkoop emphasizes that the West and the dollar may experience a decline in influence. At the same time, the Brics nations, especially those in the East, are set to gain increased prominence and power. These geopolitical shifts align with broader economic trends, including supply and demand dynamics changes, currency debasement, and inflation. This convergence creates a perfect storm for commodity investors, with gold and silver expected to perform well in 2024. The sentiment among Bullion Vault users reinforces this outlook, as revealed in their latest investor survey. The consensus suggests that the price of gold will continue to rise in 2024. Additionally, the survey forecasts that silver will conclude the following year at $29 per troy ounce, aligning with the overall positive sentiment toward precious metals in the coming year. What are your expectations for the prices of gold and silver in 2024? What are your thoughts on this? Let's delve into key moments from Willem Middelkoop's interview with these video clips.
It pointed me back in time towards 2019. You might remember the video that Putin was entering a G20 meeting, and he walked up to the Saudi leader MBS and he gave the high five on video. Trump was walking in the back, and everybody was surprised by that footage, and nobody really understand why they seemed to be very close friends. But now we start to get the picture. You know, you have the Brics countries: Brazil, Russia, India, China, South Africa, with friends like the Saudis, and they're working on a parallel trading system. They're working on a parallel monetary system. That's my opinion. And we also know that they have pointed to the fact that they would like to have it gold linked or gold backed. And I think that's also explains why gold is trading so strong. Of course, the dollar has been remarkable strong in the last, let's say, 2 years. And so from a technical point of view, you could expect a correction. The correction has already started. But if you look at the dollar from a fundamental point of view, the weakening of the West, the weakening of the US, elections coming up, you know, you have to choose between Trump and Biden. I think this will be a nightmare, what will happen in November next year. And so there are lots of reasons to be bearish on the dollar. But never forget, these changes always take longer than you expect. So I think we're in for a big reset. The big reset has started. We'll see a change with the West and the dollar losing power, and the East, the Brics countries, gaining power. Bank runs are rare as well, but if we look at the quality of the balance sheets, we know there's some huge damage being done to balance sheets of banks, commercial banks, but even central banks, because of the bond crash we had in especially last year. So commercial banks are still at risk. We've seen the takeover of Credit Suisse by UBS in Switzerland. which brings huge risk to Switzerland and the Swiss financial system because UBS is too big to save now. And we've seen central bank presidents in Europe explaining how they might be able to use gold revaluation accounts to strengthen the balance sheet of central banks because central banks are having some difficulties of their own. And that's why I think a gold revaluation is still in the cards. The party is starting, and that's the party for commodity investors like ourselves. I started a commodity fund in 2008. That was the top of the last cycle. We had a bear market for 15 years. And I think there's a real chance we'll get a very serious bull market, which will have some legs. It could run for 10, 15, 20 years because of supply and demand, because of the debasement of currency, because of the inflation. So there's a perfect storm developing for commodity investors. And forget about gold and silver, they will do well, but watch the battery metals, watch lithium, watch copper. You know, they also had a huge correction in the last 12 to 18 months. And we see the market turning already. We were up 5% in November. Uranium is very
The
strong.
PGMs?
Yeah, PGMs are starting, they bottomed out. Look what happened to palladium in the last week.
Yeah.
We're up 50%. So I think there's some money to be made, finally.
Willem highlights the pronounced impact of remarks made by Jeremy Powell, particularly on the price of gold. Following Powell's statements, gold surged significantly, experiencing a noteworthy increase of $60, $70 within the first 24 hours. Despite this surge, the yellow metal maintained a relatively stable range between $2,000 and $2,050 per ounce throughout the week. A complex interplay of factors influences the market dynamics for gold. While dovish signals from the Federal Reserve initially propelled gold above the $2,000 an ounce threshold, the metal faced challenges sustaining further gains. Improving risk appetite and a degree of skepticism among traders regarding early rate cuts from the Fed contributed to this struggle for additional upward momentum. Notably, central bankers, including those in China, are attentive to historical lessons related to monetary systems and are contemplating potential resets that may involve a revaluation of gold. China, in particular, has emerged as a significant player in the gold market, consistently increasing its holdings for 13 consecutive months. Despite this upward trend, there is a recognized need for China's central bank to boost its gold reserves further. As of October, China's gold reserves stood at 2,214.60 tons, representing only 4.3% of its foreign exchange reserves. Let's get back to the interview.
The market reaction was so strong. Look what happened to gold. It jumped $60, $70 in the 24 hours after the first remarks by Jeremy Powell. Our own fund jumped 6% in just 2-3 days. So I think they just want to dampen the markets a bit. And we also had these, in Frankfurt, we had the ECB, Ms. Lagarde, telling the markets that rate cuts weren't weren't to be expected here in Europe. So I think they want to confuse the market a bit more. Always make the mistake by looking through the American lens, so to say. So we always watch the gold price in dollars. We always watch the interest rate cuts, and then we look at the Fed. But you have so many different markets. You have so many different national banks. And I was pointing out, even in Denver a few months ago, that the first central banks in Latin America are already cutting rates. And the same goes for gold. You know, we've seen all-time highs for gold in most of the other currencies, but we always ignore that. Most of the investors ignore that, and they only watch the dollar. With gold in dollar terms, or what will happen with rate cuts in the Federal Reserve, just look a bit further and look what happens in the rest of the world, and often you can find the clues there. Since the start of the Federal Reserve, of course, we lost a lot. We lost a lot of, if you look at the value of the dollar, the purchasing power declined by 95%. But we also should point out to the positive fact, since the Federal Reserve is there, they have been able to avoid financial panics for most of the time. Of course, in 2008, we came close. Of course, there are still risks. There are huge risks. But I think central bankers, they're not stupid. They understand the history of money. They understand the history of monetary systems. They understand you can do monetary resets. That's always been my main thesis. Central banks know they will need to have a monetary reset somewhere in the not too distant future. And they might need to have a revaluation of gold as well. And of course, we've been talking and warning about the superinflation for quite some time now. Inflation is coming down, interest rates are coming down, so that helps. But I'm afraid for the next leg up, a bit afraid that the inflation will run in 2 or 3 phases. And after the decline in inflation we experience now, we could have a restart of a next phase of a wave of inflation later in 24 and in 25. And that's something to watch carefully. And if you have flexible interest rates, this decline might be a great moment to to take some longer term fixed interest rates.
How might the dynamics of gold markets continue to evolve? And what role could gold play as a strategic asset for individual investors and central banks in the foreseeable future? How do you perceive the impact of Jeremy Powell's remarks on the recent surge in gold prices? And what challenges or factors have contributed to maintaining a stable range for the yellow metal? Share your thoughts in the comments section. If you liked the video, please subscribe to our channel and remember to activate notifications by hitting the bell icon. Your participation means a lot to us. Thank you.